This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks podcast here on Stockbox with Alan Green, our research analyst. Hi, Alan. How are you?
I'm very good, Mark. It's a Friday in the UK. It's grey and overcast, and I don't think we're going to get the summer that we had last year. It's just grey and horrible. So, anyway, trying to focus on other things to keep my pecker up.
Yeah, that's a bit of a depressing way to start the podcast. So. Telling us we've not got a summer, it's written off. Okay, thanks, Alan. Cheers for that.
Well, at least it's the weekend. That's the bright point. So
at least it's the weekend.
That's the upside.
Yeah, exactly. Yeah. Okay. Well, I'm still hopeful we are going to get some summer. We've still got a bit of time left. But in the meantime, then maybe we should talk about some opportunities in the stock market at this point in time, because there's some good opportunities to be had, I think. So we've had some quite good developments, I think, on Panther Metals, that is, and
yes, we have. Yep.
As well. You're going to talk to us about Cadence as well. So over to you, Alan.
Yeah. Okay, so. We spoke about Panther Metals, of course, earlier in the year, and Panther have two primary focuses. Just a bit about the company, first of all. It's trading at just under 13 pence, giving it a market cap of 7.8 million, which when you hear about what the company now has in its asset portfolio, I think is derisory, really. Shares are traded as high as 17.5p on the year and as low as 6p. So we're now somewhere sort of halfway between the two. But there's absolutely, in my opinion, it's absolutely at bargain basement level at the moment. So, of course, Darren Hazelwood is the chief executive of the company. I know you've spoken to Darren on many occasions, Mark, on the podcast here on Stockbox. And Darren is a former retail investor, poacher turned gamekeeper, if you like. So he has the unique perspective of seeing a company's investment proposition from both sides of the fence, both as CEO and also as an investor. And he has carefully nurtured the Panther asset portfolio and built it up into what I think is a company with probably some of the assets with the greatest potential that I've seen owned by a small cap mining company. So, of course, Darren's the CEO. We've got Dr. Kerem Sina as the non-exec chairman, over 20 years experience in the industry. And Dr. Sina has been responsible for discovering nearly 4 million ounces of gold in Eastern Europe. And, of course, the Ariana Resources gold mine in Turkey. And he's an entrepreneur, a recognized entrepreneur sort of in the mining industry, having sort of taken part in and is still actively involved in a number of mining projects in Europe and in the Asian continent. We also have the Australian CEO, Dr. Daniel Tuffin, who is mining engineer with 20 years experience. And as we'll find out shortly, of course, Daniel will be heading up Panther Australia, which is the Australian spin-off company that is due to be floated on the ASX. The initial $300,000 has been raised for that listing, and the company is expected to raise around 5 million Australian dollars when it comes to market shortly. And that entity will contain all of the assets that I'm about to put in front of you. So I'm going to start with Canada, though, because Panther Metals or Panther Metals PLC has a significant holding in Canada. It's called the Big Bear Project, and in particular the Dotted Lake project, which is part of the asset portfolio. And when we spoke about it last year, we looked in detail at, or earlier this year, we looked in detail at the Schreiber Hemlo Gold Belt, and of course the company is operating there. We have the Barrick Hemlo, the Hemlo gold mine owned by Barrick Gold, and other operators in the area, including Palladium One, which of course owns the Tycho nickel mine, which is near to the Dotted Lake project. And bring us up to date on that. The company announced a few weeks ago that it had commissioned a soil and geochemical survey at the Dotted Lake property, and as a result of the work done last year with the airborne surveys and the historical trenching data, it had added some strike extensions to its existing gold targets. At this present moment, and I was talking to Paul Johnson the other day, as you probably know, Mark, and Paul Johnson mentioned the fact that Darren and his team were about to commence drilling in at Dotted Lake, so they were very excited because, of course, Power Metal have an adjacent property there too, and the Panther announced that the drill contract award was imminent, and of course, once that takes place, then I'm sure will just be a few weeks away from drilling commencing in the area. So that's very exciting, and it's a huge area, and of course it's dotted, if you excuse the pun, with mining companies and active gold mines. I mentioned, of course, Palladium One with its Tycho mine, which is nearby, and that's doing a great job with its nickel discoveries there. Superior Lake Resources, Hemlo Explorers, Generation Mining, Metal Corp, and all of these are close to the Dotted Lake properties. So that's been moving along, but of course the other side of the coin is are the properties in Australia. And at the start of the year, the Panther announced the development of the Maracay and Anabaru projects in the Northern Territories, and indeed these were close to some historical gold mines and some workings. And Tom's Gully, which is a 1.1 million ton resource. Russell's Roost, of course, 51 million tons at a low gold grade, and that's by China Hanking Holdings. And I think in that area, a 13-ounce nugget was discovered with peak grades across the historical data of some 50 grams per ton. Anabaru, which is 150 kilometers. It's approximately 18 kilometers away from the Tom's Gully and Russell's Roost properties, and also, of course, the Donkey Hill prospect isn't too far from there as well, which is has been worked on by Newmont Mining, 61 grams per ton and 50 grams per ton there from grab samples, and indeed those projects continue to progress. But what's really changed or transformed, in fact, Panther Metals in terms of its prospectivity and I think its overall investment proposition is the acquisition of the Morolia and also the a little later the Mikado prospects in Western Australia at the start of the year. And Dr. Sina was extremely enthused by the prospectivity here, and the company said at the time it was the type of property that Panther's team skill sets have been able to create a commercially viable project from. And this is it's east of Laverton in the Eastern Goldfields, close to an Archean greenstone belt. And as the work at the property has developed, more and more discoveries have been made. Indeed, within the territory of Morolia is the Coglia nickel and cobalt projects, which we've now established a maiden JORC compliant resource there of between 30 to 50 million tons of both nickel and cobalt. And when you consider nickel is currently selling for over $18,000 per ton, and cobalt selling for over $50,000 per ton, that gives you some idea of the value that's right there for that single asset. But this is just a very small part of it. There's a very good corporate presentation on the website that I'd urge listeners to go to after this, which details all of the different assets within the Marolia prospect. So there's also a timeline too, which I think is very important when you're looking at these, because as investors, you want to get involved in something and know what the various stages of developments will be, and how the company is going to deliver value, in 6 months, in 9 months, over the course of the next year. So within Marolia, there are a number of prospects. We have the 40-mile camp prospect anomaly. This is currently, or the 40-mile camp anomaly is some 2.5 by 5 kilometers in diameter, and it was previously in a previously unexplored area, and was discovered through a combination of drilling and aeromag surveys. This is north of here. We have the Ironstone prospect, which has a peak gold value of 340 parts per billion within gold values, and has also seen historic drilling undertaken. 9 meters was intersected at 46 grams per ton, and more recent drilling discovered 2.1 grams per ton over 4 meters. But it's basically a gold-rich seam. There's also the historic Comet Well there too, the Comet Well prospect, where historical exploration has been undertaken. It's a 12-kilometer strike area, but this is also what's referred to as gold nugget country. 40-ounce gold nuggets have been discovered in fact, nuggets in excess of 40 ounces have been discovered, and the largest of which weighed 20 grams. And there are photographs on the presentation of some of these nuggets that have been discovered. So, that's the sort of thing you want to see as an explorer. We then had the Bertville East project, and of course, all of these were in within the Marolia area. And again, you've got decent intercepts there, 6.7 grams per ton. Then we moved to the west of the Marolia prospect into the Mikado project, which is very close to the Bright Star Beta Mill mine, which is a producing mine. There's I'm just going back to a map here, just looking at the area in relief format, so looking at the other gold mines that are in the area. Just south of the Mikado prospect, we have the Wallaby Goldfields, which are 8 million ounces, and the Granny Smith Goldfields. I thought Granny Smith were apples, but there we go. The Sunrise Gold Dam, of course, which is 6 million ounces, and that's owned by Anglo Gold. And these are operated and owned by Big Star companies. But the Bright Star Beta Mill is very close to the Mikado prospect there. So it's a raft of prospects within a large area. And as has been described by the company, these are prospects that you can literally just walk up to and start drilling. It's although it's remote, it's the access is reasonably good, and it's crisscrossed with roads, access roads, and of course crisscrossed with existing operating mines. So the plan for the second half of the year is to undertake drilling work at Marolia, at 40-mile camp, and the Ironstone projects, and of course to undertake some drilling for cobalt and nickel at the Coglia project, where there's already that 30 to 50 million ton resource, and then we go to the up to the further west of the Marolia prospect, where we find the Red Flag prospect, where the company recently added some territory, that work will be done there later in the year, during the second half, to complete aeromag and electromagnetic surveys, ground electromagnetic surveys, to get a greater understanding of the geomodeling and the magnetic anomalies under the soil there. Also, further field mapping work is planned. I mentioned Annabrew and Maracay at the outset. Further field mapping work is planned there. But I think the focus now is very much on developing the Marolio assets, and of course with the JORC compliance Coglia asset. That's one that I think investors will be very excited about and should deliver some near-term results, which after all is what we're all looking for as investors. Other notable events during the year that we've seen, three investors, including Darren. I mentioned Darren Hazelwood, of course. He's both an investor and CEO, so he's seen from both sides. Both Adrian Crucifix, Ian Bagnall, and Darren have increased their shareholdings in the company throughout the course of the second quarter, which is highly significant. And I think if I'd urge investors to go to the website or just go and look at the latest announcement, which is this new corporate presentation on Marolio, and I think you'll get some idea of the value here. And I think what is what's particularly exciting is that these assets have been grouped together and listed separately as Panther Australia. So of course, Australian investors will have an opportunity to buy and invest in the company, both at IPO stage and subsequently, if they so wish.
Yeah, and what do you think about that? It's not a spin-off in Australia then, and is the focus, do you think, going to shift for Panther directly in for the Canadian assets and let the Australian ones kind of run themselves?
I think I think as we've seen, and the strategy here is quite clear to me. And of course this is something that Power Metal Resources are also undertaking, is they're spinning off assets separately. When you get a group of assets together, opportunities often arise. You're working on one particular asset, and adjacent territory becomes available, and perhaps you realise then that the geological anomaly discovered on your territory also runs into the adjacent territory too. So then you can make that acquisition. So of course all these assets are then put together, but it's very hard, I think, when they're grouped together with a bunch of assets in other countries too. It's very hard to recognize the individual value of those. And what this IPO on the ASX will do, it'll raise, as I say, that they're looking to raise 5 million Australian dollars at the IPO. So it'll raise money to complete the exploration work and develop the drilling and firm up the asset, and possibly even get it to JV stage, where one of the bigger operators like Newmont or like Rio could actually come in and seek a JV, and that's obviously very exciting. But also what it does, it'll immediately firm up value with Panther Metals PLC here in the UK. It'll put an asset. It'll bring greater value in and put a chunk of money onto the balance sheet of Panther UK, which will then enable it to progress and fast track the assets in Canada. And of course, that's what, as I said, Paul Johnson and Power Metal are doing as well. Every IPO will bring value in and add value into the asset, into the core holding company.
Okay, yeah, it makes sense. And I did interview both Darren and Dan Tuffin, who's the CEO of Panther Australia, who I guess we'll be hearing more of in the future. And yeah, it does look like things are progressing very well there. And I think this latest development in the Marolio project, this Coglia target, was a bit of a surprise, but in Darren's own words, it's potential, well, I think he said stunning target, potential for a company maker. So yeah, a nice sort of bonus there coming from that particular area of Marolio.
Yeah, they literally seem to have walked. I mean, Darren describes in some of the news announcements, just walking in and commencing work, and it seems as though they've literally stumbled across this asset that's been there. But of course, I think they've managed to acquire all the territories, and often these, as I say, the asset overlaps two territories, so perhaps it's hard to acquire the value. But with the territories they've acquired at a stroke, they've got this asset which has a JORC estimate attached to it as part of the offering, and there's huge value there straight away.
Indeed, good. Okay, thank you for that. Thank you for bringing us up to speed on Panther Metals. So let's talk about Cadence now.
Okay, so Cadence Metals, of course, we have spoken about Cadence in the past, but it's this company has been quietly delivering great value. I mean, if you'd invested into this company a year and a half ago, you'd have a 10-bagger on your hands. The shares have risen. They were just under 9p at this time last year, and they're currently sitting at 29p, having been as high as 32p on the year, giving the company market cap of some 43 million sterling. But Cadence is a mining and investment company, and it has a number of assets around the world. And I think with the focus on their core asset in Brazil, investors are really seeing value in the opportunity here. And they really they arrived at this asset at the right time to, I think, bring it back to life. So that asset, of course, we're going to talk about iron ore at the outset, and that is the Amapa iron ore asset. Before I talk about that, just going to talk about the board briefly. We've got Andrew Suckling, who is the chairman, and Andrew has roughly 20 years experience in commodities, working as a commodity broker and at different levels on boards of different companies. And then Kieran Mazaria, who's also the chief executive of UK Oil and Gas. Kieran has been at the helm of Cadence for some years now, and Kieran has a very cautious and pragmatic approach to the investment strategy of the company. And of course, the company focus was initially on lithium, and it's not moved away from that. It's got some great lithium assets, but with the iron ore or the squeeze in the iron ore price after the collapse of the Vale Dam in Brazil, they recognise the opportunity that Amapa could deliver. So the board are working to bring the Amapa project back to life, and the Amapa project is a complete iron ore mine in the northeast of Brazil, which includes the mine. It includes the railway that takes the ore from the mine to its own port at Santana, and at that port there's a huge pile of iron ore tailings, and the iron ore mine was initially, or the Amapa project was initially owned by Anglo American, and in 2012 they valued the asset on their books at 600 million US dollars, and the mine, of course, was at that stage producing. But iron ore prices fell. Then there was a collapse at the Santana port, which led them to the local company that was then owning the company, which was a company called DEV, basically put the company into administration. So Cadence came along with a plan, and that plan was to invest into the project to bring it back to life. So the company have a three-stage approach to this. The initial approach was to acquire up to 27% of the Amapa project, which is the mine, the railway, and the port, by investing to $6 million over two stages. And the first stage was an investment of $2.5 million to be put into escrow to go to repay some of the outstanding creditors of the mine, and also repay local contractors and so on. That's been completed. Apart from the fact that three of the creditors are banks, and they're banks in different places around the globe. And an agreement has been finalised with the banks, but the final legal preparation is being completed. Once that's signed off, then Cadence will own that 27% of the Amapa project. There's then a further opportunity for them to take the investment up to 49% in the future if they so wish. But that's obviously a bit further down the road. In the meantime, they've secured the permission from the Sao Paulo Commercial Court to ship the iron ore tailings, and several shipments have gone off already, and those have been bought by large companies in the industry. They're unnamed companies. The companies have chosen not to be named, but the assets have been sold. Money's coming to the company to the point where, on a financial level, the company or Cadence has now delivered a very strong set of full year results. Now got assets of 22 million compared to 11 million at the end of 2019, and the company delivered a diluted profit per share of 6.6p from a loss of 2.3p the previous year. But equally, there were convertible loans the company has now paid off, so the company is now essentially debt free. So the court have ruled that enough iron ore can be shipped to release a 10 million profit up to the signing by the banks of the agreement, and obviously after that they can go full steam ahead to redevelop the mine. They've initiated a new research team to undertake an examination of the assets in the ground at Amapa. The mineral resource estimate has been increased by 21%, and the company now estimates it can deliver some $266 million per annum when the mine's back in production, which is an EBITDA of about $130 million a year. So that's the potential that is within that project, and potentially Cadence could get up to 49% of that, which is hugely significant. So that's where we are with the Amapa asset. And that's why the share price has gradually crept up over the last little while as we get to this final hurdle in completion of that process.
But Amapa is really the flagship, is it?
Amapa is very much the flagship. Yes, it is. Yeah. But then we come to the company's other investments, and the company owns 12% of European Metals Holdings, which is the owner and operator of the Sinovac project, and this is the lithium project that's on the Czech-German border, and it's the asset has been proved up. There's a huge amount of potential there. European Metals Holdings has gone into partnership with the East European Utility CEZ Group, which is an enormous company, and they're developing the Sinovac hard rock asset. It's the largest hard rock asset in Europe and the fourth largest in the world. They're developing the Sinovac into a lithium mine, and they will be building a gigafactory not far away in order that they can utilize the lithium asset. So that's huge, and Cadence, as I say, it's gradually sold off some of its holding over the year, but still owns 12% of that asset. We then get to the other investments that the company has. The company has two concessions at the Sonora Lithium Project, which is, of course, operated by Bacanora Minerals, and Bacanora has a joint venture with Ganfeng Lithium, which is the largest lithium company in the world, Chinese company, and there are the megalith and mexolith concessions at the Sonora project, which Cadence has a 30% stake in. We then have the Yangibana rare earths project in Australia, which is currently worth the Yangibana asset is in Western Australia near to Gascoyne, and it's a series of assets. Cadence has a 30% stake in the Yangibana North asset, and there's a resource estimate established there. Overall, the Yangibana asset, or the Yangibana project, is valued. It's owned and operated by Hastings Technology Metals, with an asset value of some $500 million on the market at the moment. Several takeoff agreements already in place, and much more to come. In addition, Cadence has a 1% stake in MacArthur Minerals, an ASX-listed company that owns the Lake Giles Iron project, which has taken huge strides forward in recent months. And there are a lot of parallels with the Amapa iron ore project. The MacArthur has spent a lot of time over the past few months getting the transport system in place, the water system for the mines, and everything else. So logistically, it's very similar in terms of its operation with the Amapa project, and certainly the MacArthur team are very much aware of what Cadence are doing in Brazil with Amapa, and they're learning from each other. And then finally, Cadence has some hard rock lithium assets in Australia, the Picasso, Litchfield, and Alcuta assets, and these are in the Northern Territories in Australia. And again, those are dormant assets at the moment, but given the increase in the lithium price that we've seen already this year, I don't believe they'll be that way for too much longer. But you collect those all together. I mean, the Amapa asset alone dwarfs the current Cadence market capitalization, in my opinion. And people can take a look at that and come to a conclusion. Again, go to the Cadence Minerals website. There's a very good company presentation, which is focused primarily on the Amapa asset, but the other assets too have great value. And obviously, the Sinovac lithium project in Czechoslovakia is very high on that list too. But I think the Cadence market cap will continue to increase, and once the deal is finalized and signed off by the banks and the creditors, then I think we're going to see the share price progress pretty rapidly from that point.
Okay, so I know we've spoken, or you've told us about Cadence in the past a few times. Are you if you have to keep a close eye on it, how do you feel about the progress? Are you fairly satisfied? Do you want to see a bit more progress, or?
I think because I work with the company, I'm a shareholder in the company too. I've got shares in the company, and they have. I picked up shares about 18 months ago when they were 3.3p. So it's had a great run, but I still think we're right at the start here. Okay. You got the potential for Amapa alone. That asset could be worth, it could be worth close to $1 billion. Once it's back up and running again, and Cadence could own half of that. So and the recommissioning process is underway at the moment. So the profits that have come in from shipping the iron ore, they're going into the recommissioning process of the mine, and of course there's all the benefits that brings to the Amapa region as well, in terms of employment, health, education, infrastructure, everything else. So there's a lot of benefit that's going to come to northeastern Brazil as well. But certainly in terms of investor value and value inflection points, once this deal is signed, and the reason it's taken so long is because you've got 3 different banks in 3 different time zones having to agree on a creditor restructuring, and we all know what banks are like, but the agreement is in place. There is agreement with all of them. It's been drafted by the lawyers, and it's simply got to be signed off, and then we're home and dry on phase 1.
So really, that's the catalyst moment, is it then? This getting this agreement all agreed and finalised.
Yeah, I believe so, okay. And I think I'm looking back on the Cadence valuation previously, and the share price hit 40p. I think a year. Actually, it's 2 years ago, and I've said in previous podcasts, I believe that's kind of the next value inflection point for the shares. That's probably where it'll stop, and then we'll see the valuation build from there. But it's incredibly exciting. Obviously, if there is a change in the price of iron ore, if there's a reduction in the valuation of iron ore, then it could all change. But I think I think anyone that's studied this company knows where the potential really lies.
And the other projects that they have, then are they still core? Are they still with an added bonus perhaps, or is the focus really on I've forgotten the name of the project, but Amapa, yeah. So certainly Amapa is the flagship project, but of course with European Metals Holdings, Cadence is as that develops and as the EMH share price increases, Cadence will continue to take profit, so it will sell down that asset. But its strategy is very much as an investor into early and later stage projects, and of course Amapa is really a later stage project because it was a producing mine up to a few years ago. European Metals Holdings, once the Sinofec mine is completed and it's producing the lithium carbonate, which can then be used, and the gigafactory is built. I mean, who knows? I imagine Cadence will probably sell down as it goes forward. And likewise with MacArthur, you had a bigger stake in MacArthur, but the MacArthur asset has now developed and the share price has progressed there, so it's sold that down. But certainly, I know the company is mindful of these hard rock lithium assets in Australia, and of course they can be developed at any point. As of course will be, if you look at the Yangibana project, the rare earths project, the Yangibana project, Hastings Technology Metals have takeoff agreements with major manufacturers around the world already for that, and the different assets, the assets closest to where the mine and processing plant are being built are being developed first. Yangibana North is further away, but that will of course be targeted for development and drilling in the not too distant future. So that's an asset that's a dormant asset, but one that I believe will deliver value probably within the next 2 years. Okay. Well, thank you very much again, Alan Green, for telling us a bit about the investment case for Panther Metals and Cadence Minerals.
Thank you, Bob.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.